Welcome, everyone, and thank you for attending GreenPath's Financial Wellness webinar, Navigating Financial Uncertainty. So those who are not familiar with who GreenPath is, we are a trusted national nonprofit housing and financial credit counseling agency with the mission to empower people to lead financially healthy lives. We actually started as the budgeting service of the Michigan Credit Union League in 1961 and grew into a nationwide financial wellness organization. We counsel in all 50 states and in Puerto Rico, and we believe that financial education is something we should all continue to engage with, regardless of how much we already know. There's always something we can learn to help maintain or improve our financial wellness. So today we're going to talk about the topic of navigating financial uncertainty. So my name is Dawn Watson. I have been with GreenPath Financial Wellness for just almost 34 years. I've had the opportunity to work with many individuals and families to help them achieve a brighter financial future through our counseling and invaluable education resources. I'm also joined by Shamika Joseph. Shamika, please take a moment to introduce yourself.
Thank you, Dawn. Hello, everyone. My name is Shamika Joseph, and I am a learning experience designer here at GreenPath. And I've had the pleasure of working at GreenPath for about 6 years now in various roles, including financial counseling as well. And I'm excited to be with you all here today and provide some good information.
Great. Thanks, Shamika. So we know that going through an unexpected change in life that will impact your financial situation can cause a lot of emotion, from stress, anger, frustration, and probably shock. So it's crucial to allow yourself to feel the emotional impact while also taking steps to address the situation. We want to help you by reviewing a few items that you can do. First, we're going to talk about assessing your situation. We're going to go over some resources available for you, and then help you plan for the future. And then at the end of the webinar, again, we will answer the questions that you may have.
First, take a deep breath, and you are not alone. If you are currently experiencing financial hardship, you are not alone. As of right now, 87% of adults are stressed about rising prices, and saving money has been a significant source of stress as well. So we're going to tell you about 3 things that GreenPath told us that they have needed to hear. It's going to be okay, it's not your fault, and you are not alone. So while we do have a lot to cover in today's webinars, we do want to remind you that there are resources and people who are available to help. So if you may need a listening ear or a guiding hand, GreenPath's financial counselors are here for you. And so now we can move on to a bit of more of the logistics of what actions you can take to create a little bit more certainty. So the first step in assessing your situation is you want to determine the length of your hardship. So depending on the length of your hardship, that can help inform your decisions. So your hardship could be shorter term, lasting about 6 months or less. And some examples of a shorter term hardship, it could be a temporary change in income that you anticipate, paying off a large bill that you may have or a larger bill that you may have during an extended period of time. But 6 months or less is typically that short-term hardship timeline.
Shamika, didn't you recently have a hardship that you had to navigate? Do you want to share that experience with everyone?
Yes. So, and definitely about, I would say, 8 months ago, which would be a little bit of a shorter term hardship, my apartment unfortunately had a fire. And that absolutely was an unexpected financial hardship, considering like moving costs and all of the costs that come with replacing damaged items and things like that. So absolutely unexpected, but has been resolved now. So it was a shorter term hardship, but definitely a hardship, an unexpected one at that nonetheless.
Great. Well, thanks for sharing. And I'm sure other people can probably relate to something similar. We've all probably experienced it in our lifetime.
And moving to a longer term financial hardship. So your financial hardship could be longer than 6 months or more. A longer term hardship could be something such as job loss or any other financial hardship that you can foresee altering your financial future for a significant amount of time, but not something that you think will be permanent. So permanent financial hardships are hardships that will significantly change your finances forever. So this could be something like a loss in the family, a new disability, divorce, or a separation. So once you have determined how long your financial hardship will last, the next step is you want to begin to review your assets. So reviewing your assets will give you a full financial picture. And first, you want to start by reviewing your bank balances. So gather your bank statements for all of your accounts, checking and savings, or whichever accounts you may have. Review your transactions for any discrepancies, and definitely review your balances to understand how much money you currently have to work with. Now, next, you want to check on your cash on hand. Do you have any other available funds that might not be in a bank account already? Definitely take note of how much. Next, you want to review your retirement accounts. So if you have any 401ks or other investment accounts, such as Roth IRAs, any stocks and bonds, or if you have CDs, review those as well. So becoming aware of this information will provide you with a better understanding of your options. So typically, we do not suggest pulling money from your retirement account where you could be penalized, but also we do understand that you may have to do what is the best for your situation. So once you have reviewed all of your assets, it's a good time to review all of your debts as well. So have all of your bank and credit card statements available, and your bank statements can give you a clear idea of what debts that you may be spending on monthly. Gather your credit card statements and review all of your transactions. Now you want to also make a list of all other creditors that you may have. Do you have personal loans, car loans, credit cards, or any other monthly debts that are receiving a monthly payment? Write down their current balances, minimum payment amounts, interest rates, as well as due dates. So once you have reviewed all of your debts, it's time to create an emergency budget. An emergency budget is the budget that you will be using during your time of financial hardship. First, you want to write down all of your monthly expenses in your current hardship income. You want to use your bank and credit card statements to help you determine which expenses to prioritize. And priority expenses will typically include rent or mortgage payments, groceries, car, or any other transportation costs you may have, and any day-to-day essentials. You want to review your budget for any areas that can be eliminated or reduced during your financial hardship, such as streaming services, food delivery apps, or any subscriptions that you may not need during this time. We will also be providing you with a budget template in the follow-up email as well, or you can use this QR code to find the emergency budget on our website.
That's great information, Shamika. So I know we recently went through and did some of this, so kind of looking at what an emergency budget might look like for our household. And one of the things that we were spending a lot of money on, you pay the bill, you just don't even realize you're spending it with our cable bill. It was astronomical. It was $185 a month. And we were still paying for streaming services. So we took stock, made some major adjustments in what we were doing, canceled the cable bill completely to free up some additional money to work towards creating additional savings for future needs that we were going to have. Any experiences there for you?
Yes, absolutely. Just during my time of financial hardship, I was definitely reviewing my emergency budget and seeing where I could cut costs. And I actually discovered that I had a subscription service that I wasn't even using, but paying months and months worth of that subscription. And that definitely had to go. So it was a good idea to just create an emergency budget and review all of my expenses and see which could be deducted and which could be, and Now I don't even miss that subscription, so was more than happy to cancel it.
Yeah, I'm sure we all have items that we spend money on without really consciously thinking about it. And if you need help creating the emergency budget, we here at are always happy to assist. So if you start working on pull that budgeting resource that we have on the QR code, but you're still looking for additional assistance, I'm just going to put our information in the chat so that you all can have that. And you're welcome to actually reach out to us if you need any of that help.
So during your time of financial hardship, you may anticipate falling behind on some of your payments, but there are options that are available to you. There are different hardship options that may be available. And one of those options can be a potential forbearance. So whether you have a mortgage or any other kind of loan, a forbearance will allow you to temporarily suspend your payments for a certain period of time. However, keep in mind that with forbearances, the terms of your loan or the length of your loan may change. And if you have a car loan or a personal loan, you may be able to obtain what's called a loan extension or a skip-a-pay. So a loan extension will allow you to take the payment that you are unable to make and add it to the end of your loan, which will extend it by that amount. For example, if you are having financial hardship that you anticipate lasting for about 2 months and are anticipating that you will not be able to make those 2 car payments, your financer may be able to grant you a loan extension for those 2 months and add it to the end of your loan. So if your loan is a 36-month term, it may now become a 38-month term. If you have a mortgage specifically and are behind on payments, or if you do anticipate falling behind, you can request a loan modification with your servicer. So a loan modification can restructure your loan with new terms that may be more affordable to you during your hardship. And you definitely want to contact your mortgage servicer as soon as possible for more information. You can also contact your creditors to restructure the terms of your loan. Your creditors may be able to adjust the payment amount, the due date, or the interest rates. You will want to know what you can afford and let them know why you are requesting the change. Some may offer an option for a short period of time, and others may change the terms for the remainder of the loan. And if you are asking for help with your credit cards, be sure that they may be likely to close the account. You will want to double check with your creditors for the terms of any restructuring, but reaching out to your creditors will have more information regarding the terms of a restructure. And lastly, another hardship option is a debt management program. So a debt management program is offered by nonprofit organizations such as GreenPath to help set up repayment terms and help clients make more manageable payments. If you are interested in a debt management program, you can absolutely give us a call for a free and confidential conversation at 844-218-6167. And this phone number will be available to you at the end of the presentation as well. And as you are going through this process, communication is absolutely essential. If you do have a financial partner, you want to be sure to plan with them. So your financial partner could be your spouse, a significant other, or anyone that you may be sharing your expenses with. Discuss a plan to get through the hardship. Decide together which expenses are priority, which expenses can be eliminated completely, and how expenses will be split. And lastly, you want to reach out to your creditors. Make sure that you are documenting all of your calls, writing the date and time that you spoke with your creditors, write down what was discussed and who you spoke with specifically. If you do happen to enter into any hardship plans, You want to be sure to request written confirmation of all of the plans. Review all of your statements and make sure that the hardship agreements are reflected in your statements as well. We know that it is a difficult time, but you for sure want to contact your creditors as soon as possible. Do not wait until you fall behind. It is going to be okay. If you are feeling overwhelmed or uncomfortable making the calls to your credit card companies to request new terms, a debt management program may also be a good fit.
All right, thanks for all that great information, Shamika. Now that you've had some time to assess your situation, we'll want to look into resources that might be available for you to use while you're navigating through the hardship. So, finding yourself unemployed can bring a lot of complicated emotions. For many of us, we take pride in our work, and unemployment can massively impact our self-identity. So it's important to keep in mind that you'll get through this. It will not be permanent, and there are actions that you can take starting today. So if you find yourself laid off from work, the first step is to look into your unemployment benefit. Each state sets its own unemployment benefit eligibility guidelines, but you usually qualify if you're unemployed through no fault of your own. And in most states, this means you have to separate from your last job due to a lack of available work. And you also meet your state's requirements for wages earned or time worked during that established period of time. Next, you'll want to gather all your information you need to file, and that can include Social Security number, proof of identity, which could be your driver's license, government ID, or employment authorization number. You'll have your earnings history available, the names and addresses of the employers going back somewhere around 18 to 24 months. And if you have any documentation of that unemployment period termination notice from the employer, you'll want to probably gather that as well. Now you're ready to apply. So you should contact your state's unemployment insurance program as soon as possible after becoming unemployed. Generally, you're going to file in the state in which you worked. So once you file, it usually takes 2 to 3 weeks after filing to receive your first check. While applying for unemployment, continue to look for new employment options. So keep in mind that applying to new jobs will be a numbers game. We do understand that rejection can be a difficult experience, but do not let it get in the way of achieving your goals. So remember, dig deep and into your inner tenacity and keep going. So, continuing to look for employment opportunities is going to be essential. Finally, you want to determine how many weeks you'll be eligible to receive your unemployment. This, again, varies by state. It can range anywhere from 12 to 28 weeks. And how much you will receive can also vary by where you live. Now that you're receiving your benefits, ensure you know the requirements for your state to continue to receive them. This, again, varies from state to state. You may need to show you are actively looking for employment, and sometimes you do that on a weekly, sometimes on a biweekly basis. So it's important to check with your state for the expectations to avoid any delay in receiving your funds. And again, make sure that you're applying for appropriate jobs so that you can show that proof. If for some reason you get denied for your unemployment benefits and you feel that decision was inaccurate, you can absolutely appeal it. Be sure to file the appeal quickly. You're likely going to have a hearing set. Make sure you show up, come prepared with any of the documentation that you have to support your appeal. Next, we're going to discuss health insurance. So if you've lost your medical benefits because of unemployment, disability, or any other reason, you'll want to determine what your options are for that medical insurance. So Medicare is one option. Generally, it's available for people 65 or older. However, you may be eligible sooner if you have a disability. So keep in mind there can be premiums that you'll need to pay for the Medicare benefits. And you do need to make sure that you're applying within certain timelines in order to avoid any type of penalties that they may instill. You may also qualify for free or low-cost health insurance through Medicaid based on your income and family size. Eligibility rules, again, are different for every state. You can apply directly with your state, or you can go on to the health insurance marketplace, create an account, apply there. And if it is determined that you appear to be qualified, they will send that information to your state on your behalf. You can also look into COBRA benefits through your former employer. So COBRA allows individuals to temporarily continue their employer-sponsored health insurance after losing their job or experiencing a qualified life event. It applies usually to employers that have 20 or more employees. So typically you can receive benefits through COBRA for up to 18 months. However, this can be costly, as you will be responsible not only for the premiums that you were paying as the employee, but typically you're also going to pay the portion that the employer was covering for you. So another thing to consider is disability insurance that could help you with a financial impact if you are currently disabled and can't work. So if you are currently, then you're going to definitely want to investigate if you have policies that are already in place, or if you're trying to be proactive in thinking about how to prevent some future disruptions. You could consider, again, short or long-term disability insurance coverage. So check with your employer to see if they have coverage that they're already providing for you. They may have some short-term options or even both short and long-term. So check with the employer and your HR or your benefits coordinators to see what's available. If you don't currently have it through the employer, I would definitely recommend seeing what the options are during your open enrollment if you're still employed with that employer, and see what the benefits would be, what the cost would be for those. Do keep in mind, though, there may be some exclusions on what is covered, and there may be waiting periods before benefits will be paid out with the short-term disability, long-term disability. So there are also federal disability insurance programs. There's actually two. One is the Social Security Disability Insurance, also known as SSDI, and Supplemental Security Income, known as SSI. So SSDI provides monthly benefits to people who have developed a disability or who are blind and who are insured by workers' contributions to the Social Security Trust Fund. So essentially, you've had to have been paying in. To qualify for SSDI, you must have a disability that is expected to last at least a year, or it could potentially result in death, which prevents you from engaging in substantial gainful activity. So SSI provides benefits to individuals with limited income and resources who are disabled, blind, or age 65 or older. So SSDI eligibility is based on work history and contributing to Social Security, where SSI is, again, income and resource are what is impacting your eligibility for that. So again, check into those if this is something that you need as far as in providing you with additional benefits. You may also consider disability insurance from a third party. There are many companies that are out there. I'm sure you've all seen the commercials for Aflac and some of those other ones. So you want to be sure you know what is considered a disability to receive benefits. Again, those exclusions, waiting periods, costs associated with it. If you go with one of those third-party providers, even some of the employers can offer that through their benefit package. I know ours does here at GreenPath, if we wanted to pay for that out of pocket. So you can check those options out as well. And then workman's compensation is another thing to consider. It's a type of insurance that provides benefits to employees who are injured or become ill because of the job. So it could potentially cover medical expenses, lost wages, some cases vocational rehabilitation and death benefits. So if you're injured, it's important to notify the employer as soon as possible and investigate what your options are through workman's compensation. So if you find yourself out of work and want to look for opportunities in a new field, you may want to look at programs that can help provide you some new training. So sponsored by the U.S. Department of Labor, Career One Stop, and I'm going to throw that link into the chat for you as well. They provide resources for career exploration, training, and jobs. Also, every state has a workforce development board. That's the fancy name. These boards often partner with local colleges, training providers to offer a wide range of training opportunities. So there are nearly 2,300 American job centers nationwide that also help people look for jobs, find training, and answer employment-related questions. So they go by different names. We're here in Michigan. Our American Job Center is called Michigan Works. So you can look that up for your state. So if you're considering going back to college to get a degree or expand on one you already have, be sure to fill out your FAFSA, which is the free application for federal student aid, to determine if you're eligible for any grants, scholarships, work study programs, loans for colleges, or in some cases, trade schools as well. The trade schools, they do need to be in an accredited program. They have to last for at least 15 weeks to be able to apply for financial assistance through the FAFSA program. So definitely keep that in mind. If you find it difficult or impossible to go back to school based on life circumstances, and we get it, if you have a family, you need to earn an income, it may be really difficult to do that. You may want to consider an apprenticeship program, which is a career pathway where employers can develop and prepare their future workforce, and individuals can obtain paid work experience with a mentor, receive progressive wage increases, classroom instructions, and typically these are nationally recognized credentials that you would receive from these apprenticeship programs. So I'm also going to pop a link into the chat regarding that as well. So these could be great opportunities if you're in that situation. So professional development is designed to enhance skills and knowledge. Often it focuses on topics like leadership, management, communication, technology. They come in a lot of different forms, including online courses, workshops, seminars, and even some certificate programs. And these can be tailored to specific needs or industries. This could be a great way to help boost up your resume if you haven't been to anything recently. And a lot of these you might be able to find on LinkedIn Learning or on Coursera. So I would check those out if this is something that you would like to add to help beef up your resume as you start looking for employment. It's also important to create and update your resume and cover letter. So if you're like me, I've been with GreenPath for over 34 years. I haven't done any updates to mine in forever. So if you're not sure where you're going to start, your American Job Center near you, again, Michigan Works here in Michigan, is someplace that could probably offer some resources and assistance with that as well. Now, as you continue to review your expenses and look for ways to generate new income, don't forget there are some assistance programs that you may be eligible for to help you through the unexpected changes. So I'm going to put some links into the chat as we go through, and one of them is for finding your state social service agency. So there is a link that can help you locate that. And they can look for programs that might be able to help with food assistance, housing, utility help, the health insurance, as well as in some cases, outright financial assistance. Also, if you are looking for things outside of what is specifically offered through the state, there are a variety of different ways that you can find different assistance programs. 211, it's a free, confidential, 24/7 helpline that connects individuals, families with resources and services in your specific communities. So they look it up based on where you live. You can also use findhelp.org to locate services. And you can use the usa.gov/benefit-finder to find government benefits or financial help. Now, both Shamika and I have worked with families going through hardships, have used these resources to connect people with services within the communities that they live. This can really help many people get over that bump in the road, relieve some of that stress, and then allow you to focus on other areas of need. So I do really encourage you to investigate these if they are going to be able to help you. So we also managing a significant financial change due to unemployment, loss of a loved one, disability, divorce. It is overwhelming. And if you'd like to access any mental health services, check with your current health insurance provider for coverage. If you're still working, see if your employer has an employee assistance program that might be able to connect you with counseling services, or see if you can find services through the U.S. Department of Health and Human Services under that findtreatment.org. Again, I'm going to pop that into the chat for you as well. And keep in mind that a lot of local churches or community groups have programs that can help those in need. These could include food banks, clothing drives, counseling, outreach initiatives like tutoring or after school programs, or things to help if you have younger children and you're out job hunting and you need somebody to help with maybe possible childcare. So don't not investigate some of these, even if you're not a member of those. It doesn't mean that you might not be able to use their services. And also, if you do have school-age children, consider reaching out to the schools to find out what resources that may be available there. I know in the school system that my children went to, there was a food pantry, they had a closed closet. So there are definitely other resources that you might not consider initially that you could benefit from.
Thank you so much for all of that great information, Dawn.
Yes.
Now we're going to talk about planning for the future. So overcoming the financial hardship, it may be stressful and difficult in the moment, but you will get through it. So once you have passed through the hardship, or when things start to begin to feel a little bit more manageable, it's time to start planning for the future. And having an emergency fund is so important. So life is absolutely unexpected, and sometimes those unexpected events that happen can have a great financial impact. And having an emergency fund can help reduce stress and get you through that hardship. So when building your emergency fund, start small. Consider setting a portion of your income each pay period into a savings that is specifically for your emergency fund. You can start with something as small as $5 a pay period, and that can have significant savings over time. Also, consider using your tax refund or any lump sum of funds that you might be expecting to start your emergency fund. And once you have your emergency fund going, you want to keep it separate from your other savings accounts. So for example, if you are saving for a specific goal, you want to keep those funds separate from your emergency funds. You want to make sure that your emergency account is strictly for emergencies only. And when it comes to retirement planning, it is never too early to start. If you are employed, you want to review your employee benefits for any retirement accounts that may be offered. So your employer-sponsored retirement accounts can include things like 401ks or 403bs if you are in the nonprofit world. And you want to contact your employer for some more information. You can also discuss retirement accounts with your bank or credit union to discuss what additional retirement accounts may be available, such as Roths or IRAs. If your employer does happen to offer retirement accounts, they may also offer employee contributions. So you want to be sure to maximize your employer contributions as much as you can, and definitely inquire with your employer about 401k matching. And you also want to avoid early withdrawals from your retirement account as much as possible. So we definitely understand that it may be dependent on your circumstances and hardship, but you do want to avoid early withdrawals as much as possible. Early withdrawals from your retirement accounts do come with large tax penalties, and the funds that have been taken out, you may not always be able to put back. You will also lose out on the benefit of compounding interest with early withdrawals, and your funds may not have a chance to fully grow over time if you do withdraw them early. You want to make sure that you are contacting an investment advisor when it comes to assistance with retirement accounts or any other investments that you may have or make. And typically, if you are having a employee-sponsored retirement account, there are usually investment advisors that may be available for you to speak with. or you can contact your bank or credit union for investment advisors or recommendations to investment advisors as well.
Yeah, and I think this is such an important part of kind of our future, so that when we are ready to retire, that hardship is what you could consider a change, a major financial change in your life. Knowing where you stand and starting early is so important. I mean, that compounding is so important. I know here at GreenPath, we have a opt out. Everybody is going to contribute a certain percentage unless you intentionally opt out. And it has been a game changer in ensuring that our colleagues are able to start investing early and have that money compounding, because over time that growth is what's really important.
Absolutely. And you can also have a separate retirement account that may not be employee sponsored. And this may be a good option if you are self-employed or may not be with your employer anymore. So a non-employer sponsored retirement account can be opened up with any bank or credit union. And speak with your trusted financial institution for more information regarding separate retirement accounts. So once your financial hardship has ended, you may want to resume using your regular budget and your regular spending plan. So you want to create a new spending plan and update it as your income changes. You want to review your budget at least every 6 months or more or less, depending on your financial situation. Be sure to keep track of all of your spending, and this can be done with reviewing your bank statements, of budgeting apps, or even the simple method of writing down all of your transactions via pen and paper. And you want to look for opportunities to save more. So if you are expecting a bonus or a tax return or any other lump sum of money, consider allocating those funds specifically for savings accounts. You want to shop with coupons or discounts to save more on everyday expenses or everyday essentials. Avoid spending on unnecessary items just because they are discounted. And think back to your emergency budget. Think of all of those expenses that you may have eliminated during that time. You may find that you don't miss those expenses at all. And you want to look for opportunities to save more, to earn more in addition to saving more. So if you are looking to make extra income, consider a second job, such as Uber or any delivery apps, or taking extra hours at work if available, or even something as simple as having a yard sale can help generate extra income. And lastly, when you're planning for the future, you do want to review your credit report on a regular basis. You can visit annualcreditreport.com to request your free credit report from all 3 of the credit bureaus, and you'll be able to review your credit report once a week. And there is the QR code on the screen for annualcreditreport.com. And you want to avoid applying for any credit that you may not need, such as any additional credit cards or personal loans. You want to definitely try to manage the credit that you already have available. And lastly, you want to be sure to dispute any inaccuracies that you may find on your credit report. You can contact the credit bureaus immediately to report any inaccuracies that you may see, and also place a freeze on your credit report. So a credit report freeze will prevent any creditors from accessing your credit report without your authorization to lift the freeze first. And a credit freeze can be placed on for as long as you would like, or whenever you request to have the freeze lifted, and that's when creditors will be able to access your credit report once again.
Thanks, Tamika, for that information. So again, GreenPath is that nationwide nonprofit that provides financial education and tools for people to lead financially healthy lives. If you'd like to take a closer look at your specific situation, you are welcome and encouraged to call GreenPath Financial Wellness for that free confidential financial assessment. We have certified counselors who can review your credit report. We can help take a look at your budget with you, collaborate to develop an action plan to help you work towards your other financial goals or work through the hardship. GreenPath can also talk about other financial concerns or goals that you have related to housing, student loans, as well as debt. Again, this is a free and confidential conversation. GreenPath also provides a variety of free resources that I encourage you to take advantage of. These include some worksheets and guides that you may find helpful. We have a guide to understanding your credit, an aligning priorities workbook. It's helping you make sure that the goals that you're working towards, that you're spending, is aligned with those, and that budgeting worksheet that we discussed earlier. So you can use the QR code to get to our website. I'll also pop the website into the chat, my.greenpath.com. So definitely take advantage of those. In addition, we also have some free resources available on the GreenPath Learning Lab Plus, which is our online digital portal. There are a couple courses, or several courses in there, but there are a couple that we felt were relevant to today's topic. The first one is making the most of your money. So you can go and check out that course, and the QR code again is on the screen, or you can access it through the tab at the top on the my.greenpath.com website. And then the second course was debt repayment options. This is a great course if you're experiencing a hardship or working on paying down your debt, in case that there could be a future hardship that you might want to be prepared to navigate. So again, we thank you so much for taking the time out of your day to join us today. We would love to know any questions. If you have any thoughts or reactions, throw those in the chat. Shamika and I will go through those right now to determine what we have here. So give us just a second and we'll go through these. So there's a question statement is, how can a person put together a budget during this financial time? I think again, budgeting it's a spending plan. It's how you want to use your money, and how you want to put it towards the priorities that you have. So it's always changing. I mean, our lives are always changing. So that's where, just being aware of that and taking those extra steps to pick those priorities, making sure that the funds are available to cover those, looking for other ways to replace the funds if they are gone temporarily or permanently, and reevaluate on a regular basis. All right, so there's another question. If one of my credit unions has already reported me 30 days late while waiting on results to forbearance or skip a pay, should I contact the credit bureau and share my circumstances? I bumped that. My credit took a hit. Yeah, but I'm so sorry to hear that. So first, I would contact the credit union and just inquire what the expectation is. And that's why when you ask for any type of assistance, specifically ask those questions. What's going to be reported to my credit bureau? When will it get reported? How quickly am I going to hear back on the request? Really nail down all of that information. And then, like Shamika said earlier, ensure that you're taking notes about who you spoke with, when you spoke with them, the time, everything related to that conversation. If they are unable to remove that reporting from the credit bureau, you are able to include a 100-word statement on your credit report explaining anything that is on there. Now, it is something that will go into the credit report as a notation. It doesn't change what the credit score is or impact to that. But when people review the credit, they will be able to see that and take that into consideration. Let's see. Can you appeal Medicaid denials? I'm on a fixed income and also overqualified a couple thousand, so I lost it this year. I would definitely reach out to the state in which you are in to determine what you need to do to be able to get qualified. We're not experts on determining eligibility for any of these benefit programs, but there might be ways that you can use that money in order to not have it qualifying for your or getting you disapproved for that. If you're a college graduate, check in with Career Services office at your your alma mater. Very good. Yeah. I mean, if you have, you could definitely use their programs and services. Thank you for that notation. Yeah, so there's a question about looking for job opportunities. I would go again to some of those resources that Career One Stop that I put into the chat. They might be able to provide you with resources on how to look for employment opportunities if you're disabled and have limitations on what work you can do. So I would definitely do that. Let's see. And it looks like there's a couple notes in here. The findtreatment.org link wasn't working. I will check into that, and in the follow-up email, I can include any updates on that one.
It is findtreatment.gov, not findtreatment.org. So
that would be, thank you. I mistyped that. Sorry about that, everyone. So did the government make recent changes to the 3 credit bureaus? So actually, not the government. So the government mandated that we're entitled to 1 free credit bureau per credit reporting agency. So there's Experian, Equifax, and TransUnion. That has been in place for a very long time, which is where annualcreditreport.com came from, is because of that requirement. However, as COVID went on, Experian, Equifax, and TransUnion decided that they were going to let individuals pull their credit report more frequently because they wanted to ensure those that were struggling through that hardship understood where they were at with things that are being reported to the credit bureau. They have voluntarily decided to continue that process. So it isn't government that is doing it. It's actually the 3 credit bureaus that have made that decision. So keep in mind when you go there to pull that credit report, you're going to get the report itself, not the credit score. That doesn't come as part of it. They can actually charge for that if you want it. If you're interested in your credit score, I would encourage you to check with whoever you have financial accounts with, because a lot of them will give you a free score if you have a loan or an account with them. So you could check that. On that note, though, just keep in mind too, there are different scoring models. So if you get it through annualcreditreport.com, it's going to be a FICO score. If you got it through some of these other sources, it's probably going to be the Vantage score. They are a little bit different. And if you have questions about that, you can look on the website. I might say on the annualcreditreport.com, you can call us so that we can walk through that and understanding as well. All right. So somebody asked if I could go back to the QR code. Which specific QR code were you looking for? You want to pop that in? Again, I can, if you tell me that, I'll put it into the follow-up email so that you'll have the link to it. Yes, I can go back to the slide that the services that we offer. So we do, again, a lot of different services helping with budgets, credit reviews, housing-based conversations, talking about options for managing debt, and then, of course, student loan, which I think for a lot of people is creating some hardships for them. So we can discuss those things as well. All right, Shamika, do you see any other questions?
Someone asked, I think this was in regards to the credit, about not taking on new credit. Someone asked, are you saying to never take out credit? So I just wanted to clarify that we are not saying to not never take out credit, but not to overwhelm yourself with credit, especially if you have credit that you are struggling to maintain, or if your payments may be a little bit excessive for the credit cards that you do have. It's definitely good to maintain those instead of applying for new lines of credit, especially well, if it's absolutely necessary, we would let you assess your own personal situation, and we do understand different circumstances. But for sure, we don't want you to overwhelm yourself with credit.
Yeah, very good. Thank you. So there was a question about FICO and Vantage. Um, yeah, the Vantage score is on a different scoring model, so the factors are different. The number doesn't mean the same thing. It really depends. I would ask if you're going to apply for credit with a lender, ask them, what do you use so that you know? Because typically FICO was the predominant one, but I can't say that anymore because I know my credit union that I belong to, they use Vantage. So I think it's kind of hit or miss on what one they're going to use. How about you, Shamika? Any experiences there?
Yeah, it really depends, because it really depends on the creditor. So that's a good point to just ask, like, are you using the FICO or the Vantage? Because it really depends on the creditor.
Okay, so I don't use one of the credit cards. They just sent a letter saying they will decrease my limit. Will that influence my credit score? It's a hard question to answer, not knowing what your entire situation looks like, but possibly. I know that's very vague, but part of your credit score is how much available credit do you have? So if you have a lot of other open lines of credit that you don't carry your balances on, you're probably not really going to see much of a drop. However, if this is the only credit that you have with an open line of credit and they reduce it, yes, you could potentially see that. So you may want to reach out to them just to inquire about the circumstances of why they're going to do that and see if you can reestablish that relationship and start using it for normal everyday purchases that you can pay for every single month to retain that relationship with them. Yeah, I think there's a question about doing a consolidation loan. And that's again a really hard conversation to not without knowing the circumstances. So my recommendation would be call GreenPath and they can walk you through how that might help you. What could that look like? Because if you're in the midst of a hardship and your income is significantly less, your debt to income ratio is really, really high, you might apply and not be approved because of the circumstances. And then in turn, your credit's going to have a little bit of a ding because of that new inquiry. So I would definitely, you could talk to your financial institution to see what that is. Also depends on how much you're trying to consolidate. If you have collateral to use, which I'd be very careful and cautious of using secured items to get a consolidation loan for unsecured debt. So I would just encourage you, give GreenPath a call and we can talk about the various options that you have. Just let them know you're considering a consolidation loan and you want to understand what the pros and cons would be. So there's a question here. What about using credit for short-term relief or taking credit out of your house, your equity out? Shamika, anything you want to say on to that we haven't said?
Using credit for short-term relief, I think, if you're using, if you mean like putting things on credit cards that you may already have, for your short-term hardship, I think it definitely depends on your situation. I don't want to say no, don't do that, or yes, you can do that. It really depends on your situation. As long as you think in the future, once your hardship is resolved, you'll be able to manage your credit and manage those payments that you may have had to taken out during that time. It is really dependent on your own personal financial situation. I do think that is a good thing for speaking with GreenPath for, actually. You'll be able to one of our financial counselors will be able to walk you through like what your different options are and just review your credit as a whole and get a better picture and understanding of what you currently have to work with.
Yeah, great. So there's a question about prepaid credit cards that you endorse, and I just want to clarify. So if you're talking about the ones that you can get at your local Walgreens, those type of cards, they don't benefit your credit at all. So you would need to do like a credit builder product with your financial institution that you have, or look for one that is local to you that offers a credit builder product if you don't currently have a financial institution, because you need something that's going to get reported to the credit bureau. And when you're using it, you want to be very, very cautious how you use it. Again, don't max it out, even though you can afford to pay it, because that's not going to bode well for your building of credit. All right. I think that's all the questions that I am seeing. So again, thank you, everyone. Keep an eye out on your email. I will send the link to the recording, the resources that we mentioned. I will include those. Other webinars that we'll be hosting coming up, I'll include those links if you want to register for some of those. And then, of course, you'll have our contact information if you'd like to give GreenPath a call. It's free, it's confidential. We encourage you to do that. Just let them know that you heard about us through the webinar, as well as, if you heard about the webinar through your financial institution, you can let us know that as well. So thank you so much, everybody. Have a wonderful day.